Hello everyone. What if 95% of your investment returns were driven by just one decision? That decision is asset allocation, the foundation of every successful portfolio strategy. Multiple studies have shown that nearly 95% of your portfolio returns are governed by asset allocation decisions. This makes it the single most important aspects of investing, far more critical than individual stock or security selection. At its core, asset allocation is about combining different asset classes such as equity, debt, and commodities with low correlation to each other. This diversification helps mitigate risk as different asset classes tend to perform differently across different market cycles. For instance, equities may perform well during growth phases, while debt aims to provide relative stability during uncertain periods. Commodities like gold and silver often acts as a hedge during times of heightened volatility. Together, they aim to create a more balanced and resilient portfolio. The Kotak Multi-Asset Active FoF is designed around this very principle. It follows an active asset allocation approach, dynamically allocating across asset classes based on market conditions. The strategy is supported by an internal asset allocation framework that guides when to increase or decrease exposure to equity-oriented schemes, debt-oriented schemes, or commodity-based mutual funds. This systematic approach helps navigate market cycles more effectively over time. However, returns are not just about maximizing gains, they are about optimizing risk-adjusted returns. This is where active multi-asset allocation plays a crucial role, balancing growth potential with downside protection. The fund invests in carefully selected mutual fund schemes with the flexibility to allocate across schemes of Kotak Mutual Fund and or other mutual funds. It also benefits from a broad investment universe, providing greater flexibility and diversification. Another key advantage is tax efficiency. Unlike individual investing, where every switch between asset classes can trigger a tax event, this structure allows for internal rebalancing without immediate tax implications. Taxes are applied only at the time of redemption based on the holding period, making the overall investment experience simpler, more streamlined, and efficient. In an environment where markets are constantly evolving, asset allocation becomes not just important but essential. It helps investors navigate volatility, manage risk, and stay aligned with long term financial goals. Asset allocation isn't just about a strategy, it's a backbone for successful investing. Stay disciplined, stay diversified. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.